Good afternoon, everyone. This afternoon we're going to be speaking about de-risking, what it is, its impact, particularly on emerging markets, and also what are some of the activities that we can do in order to effectively address it. We'll be focusing primarily on the compliance response and what financial institutions can and what, in our case, NCB, we have done in order to be able to mitigate the impact of de-risking on our institutions. There are obviously broader things that a jurisdiction can do, and financial institutions probably should get themselves involved in lobbying for effective development of financial services regulation, particularly in relation to AML and CFT. But what we want to focus on primarily are the activities that we would encourage financial institutions to do internally to develop their compliance programs and to strengthen the relationships with their correspondent bankers in relation to compliance issues. Although during this webinar I will speak significantly about money laundering, obviously the compliance program includes countering the financing of terrorism and the proliferation of weapons of mass destruction. And so I'd ask that any comments that I make in relation to money laundering be taken in that light. So firstly, what is de-risking? We'll spend a short time speaking about this. We all know, I believe, that it's a global trend that's affecting many small developing areas of the world, putting our financial systems, we believe, at jeopardy. We are particularly at risk because of the heavy dependence on correspondent banking relationships for access to the financial system. De-risking involves the exiting or closing of accounts of clients considered to be high risk in order to enhance the safety of the institution that's doing the de-risking. There are various definitions that abound. I think that's a simple working one that we can use for the purposes of this webinar, which is less about defining what de-risking is and more about defining how we respond to it effectively. I think the impacts are very well known. They threaten isolation or further isolation of vulnerable communities from the formal sector, in addition to a variety of other socio-economic and security concerns. We believe it also ushers in a level of activity into less regulated channels, thus reducing transparency and limiting monitoring capabilities. And we recognize, of course, that this is a powerful factor against de-risking as an activity, and many of the discussions that have taken place around de-risking focus on this as a reason that the activity should not be allowed to continue in the way it currently is. But we're going to take for the moment de-risking as a given and speak instead about how we can address it. And we believe that the first aspect that we need to speak about when we talk about how to address de-risking is why it's taking place in the first place. Because we believe that if we properly understand the rationale for de-risking, that will help us develop our response to address the underlying causes that face our global financial institutions as they seek to minimize the risks that they face. And we know that de-risking is occurring because of the increased financial regulation and the increased penalties that are associated with it. And those penalties are to a significant extent growing as corporate penalties, and also in more recent years we've been seeing personal penalties being introduced. Compliance is therefore very costly for global financial institutions and for compliance professionals, and it is very risky. The decision whether to continue an existing correspondent banking relationship or to terminate it is affected by a cost-benefit analysis. Often, the risk and cost of maintaining the relationship may outweigh the expected benefit. It follows that the smaller you are, the lower the residual risk you present to a correspondent bank needs to be. And so smaller institutions probably need to expend a disproportionately higher amount of their resources on compliance to ensure that we provide a sufficiently lucrative and safe business opportunity for our correspondents. We've already spoken a little bit about the downsides of de-risking. I did want to mention the specific example of what's occurred in Belize, where only a couple financial institutions currently maintain correspondent banking relationships with banks in the US, because I believe that that brings home very clearly the threat that we face and the importance of addressing it proactively. Now let's start to talk about some of the responses that we have employed at NCB and which we have seen others employ and believe yet further of us can continue to employ as we seek to respond to this very challenging issue. One area of important focus is on transaction monitoring. This is an area that we have seen as very significant to our correspondents. In ensuring that we develop an effective transaction monitoring program, we have been particularly concerned to ensure that we have our system generate alerts based on commonly recognized typologies and that we are able to monitor large volume transactions. The right technology here is critical, and the right technology is a technology that's going to work for your own business, and it's also the type of technology that's going to be that you can configure as your business needs change. We must ensure that we cover not only what's of importance though to our business, but also any areas that impact our correspondent banking accounts. And here we particularly bring into focus foreign currency transactions, wires, and drafts. Let's talk about some of the important scenarios for a correspondent. First, there's the issue of structuring. And in many jurisdictions, as there are in Jamaica and in the United States, there are cash reporting limits. Here in Jamaica, the requirement is that we report using threshold transaction reports, similar to the US cash transaction reports, transactions of over 15,000 US dollars or its equivalent in any currency. Launderers may attempt to structure transactions just under the reporting limit, and the system should be able to flag or alert on such activity. This is in the category I would have mentioned earlier of being a common typology, which I would say a correspondent would think it's strange if we don't have. In some jurisdictions, such as Belize, Cayman, Trinidad and Tobago, there are not cash transaction reporting requirements or threshold transaction reporting requirements, but I would nevertheless advise that it is a good idea to have a structuring related scenario taking into account any internal reporting requirements. And at NCB, I would say that separate from the regulatory reporting requirement, we have a lower threshold for internal reporting. I would therefore encourage that there be scenarios built to identify structuring activity below the internal reporting requirement. I think it's fair to assume that if you have an internal requirement widely circulated, that criminals seeking to infiltrate your financial system would know what those reporting requirements are and would be seeking to evade them. We also must be sensitive to the particular threats faced based on our operating jurisdictions. In Jamaica, for instance, we have unfortunately developed a fairly sizable reputation for lottery scamming activity. And here what occurs, if you're not already familiar with it, is that callers from Jamaica will contact persons, mostly contacts in North America, contact older persons and seek to influence, I would say exercise duress, to get those persons, those older persons, to send money to Jamaica to activate the collection of lottery winnings, on the basis that the call starts with the person being told that they've won a substantial amount in the lottery and there is a fee to be paid in order to collect the winnings. As we saw this activity develop significantly in Jamaica, we had to think about what were the appropriate responses that we needed to have to address this type of activity, which was very much a money laundering related activity. Firstly, because we don't have predicate offenses in Jamaica. Every criminal offense can be considered a predicate offense, if you will, and also because evidently the proceeds of this kind of activity would be used in money laundering. So in looking at our response, we developed a training program so that employees were able to properly understand this type of activity. And then also we ensured that the scenarios in our transaction monitoring system were effectively developed and configured to address this. And I pause here to indicate that it's very important that one engages and has the right relationship with the vendor to enable an entity to have the scenarios do what we want them to do, not just what's coming out of the box. And so, for instance, here we were very careful to have a conversation with Caseware around what we needed the monitoring system to do. For instance, that we needed to ensure that we had a proper alert to look at, to capture transactions from multiple senders that were coming into one recipient, because that is one of the, while not a generally common money laundering transaction, this is the type of typology that's very common in the lottery scamming activity. We also had to think about how we were going to align our business model to address this risk. And I'll come back to speak about that alignment a little bit later in the presentation. Transaction screening is also obviously of significant importance to correspondent bankers, as it is in any effective money laundering, anti-money laundering and counter-terrorist financing program. Transaction screening against sanctions list is something that we regarded as the minimum. And over the last few years, NCB moved from a very manual process of screening transactions and customers to an automated screening process. And as we transitioned to that automated screening process, it also allowed us to go wider than the minimum sanction list. And so, for instance, we use WorldCheck, and we screen not only against the sanction lists that are required in regulations, but also we screen against negative news and other red flags. Here, we leverage the fact that not only that we have a fairly small database of transacting customers by global standards, even if it's large by Jamaica-specific standards. And so because we are not expecting to have a very high number of hits, we are able to screen a large number of screen our customers against a large database of possible hits, knowing that there are not going to be that many transactions that we will have to review, but that we will be able to detect persons who may not only be on a sanction list, but may also generally just be unsuitable for doing business with, or persons in respect of whom our correspondents may just not want to see a transaction pass through their accounts. We also believe that in addressing the issue of maintaining our correspondent relationships, it's important to look ahead, to see what some of the emerging issues are and to address them proactively. The compliance professional, therefore, must remain aware of emerging trends and methodologies and adapt accordingly. Any area of the business considered vulnerable deserves careful attention. After careful examination of areas of the business that might be considered vulnerable, NCB would see itself as having serious decisions to make on how to proceed. One area of the business, as I mentioned, that came into focus for us within the last few years was our remittance line. As scamming developed traction, we thought that this area was particularly vulnerable, and we took a look at what were the risk mitigating measures that would be required to continue our remittance business. Now, it should be borne in mind here that what we're speaking about is the remittance line as a high-risk activity, not as a prohibited area of business. And so we're not speaking here about whether or not we wanted to continue to bank remittance companies. That wasn't the issue for us. What we were confronting was the question of whether NCB wanted to continue its own remittance business, which we had at the time. This discussion and this decision was taking place at around the same time that we were purchasing our anti-money laundering monitoring solution from Caseware. And so we started to take a look at, well, what were we going to now need to do in terms of the development of the scenarios in the system that could generate alerts, and the generation and the parameters that we would set in configuring those scenarios. And as we took a deeper and deeper look into it, we recognized that it was going to take more effort than was sensible for NCB to spend, given the relatively small significance of our remittance line to our overall business. We simply didn't regard it as being a core part of our future business. And so following that examination, our decision was that we would exit the remittance line. This became an important decision for us also to have communicated to our correspondent bankers. And here what I would encourage is that when we have, if I could call them this, compliance wins, it's important to communicate them to our correspondents as well. That way they get an understanding of compliance being at work within the organization, and within the leadership, and of the willingness of the organization to make the tough calls on compliance when necessary to do so. Another area of focus, and this I think very significant focus for our correspondents, is foreign currency. Foreign currency activity at NCB, and particularly cash, gets significant attention at the compliance level. We employed a combination of business and policy strategies which we implemented in order to manage and monitor the flow of foreign currency cash and to encourage more transparent ways of conducting foreign currency transactions. Foreign note transactions, apart from their significance locally, always impact correspondents and should therefore be treated as being of interest to them. And so this gets reflected in our overall monitoring, and it gets reflected in how we approach the strategy for this aspect of the business. We do not just lump foreign currency in with the rest of the program and transactions in respect of which alerts may be generated, but we apply a significant degree of diligence around foreign currency transactions, not just in the tool, but also in the discussions that we have among our compliance staff and with the business units. Let's move on to another area of our response. So far we've spoken about transaction monitoring, and we have spoken about emerging issues. Now we want to talk about assessing your risk appetite. Now obviously it is ideal to have a formally documented risk assessment of your enterprise. Even if you don't, it is necessary to fully understand the risks that your organization faces based on its business model and its strategy. Misalignment of your risk appetite with that of your correspondent increases the risk that your relationship will be de-risked. And so we would want to seek alignment. Now, what are some of the things that we can do to seek alignment? It is important here to ensure that we have a correct handle on the risk and on how to manage it. This may be done by utilizing additional resources, particularly in compliance, by implementing measures to reduce risk levels, as I will say we did in terms of monitoring our foreign currency cash flows coming through NCB. That we did through a combination of policy-related activities and fee and transaction-based activities. And so, for instance, we increased the fees associated with foreign cash lodgements, so in order to assist in driving that activity towards instruments and direct transfers. We also imposed limits on foreign currency cash transactions, deposits, both for our retail customers and our wholesale customers, our financial institution customers. And so managing the risk also will require some modifications overall to one's program, similar to what we did in respect of the remittance program, as I mentioned earlier. One big area that came into focus for us as we thought about our risk appetite, and we thought about aligning it with that of our correspondents, was MSBs and CAMBIOS. We acknowledged and noticed that there was heightened concern in North America around the high risk of MSBs and CAMBIOS. And I think seeking to do something now would be perhaps a little bit late. We started several years ago, but it's certainly better if one is looking to retain relationships to be doing something now rather than doing nothing at all. So we took a look at our portfolio of CAMBIO relationships, and we concluded that there was the need to address it very carefully because it had grown over a few years before we were making the decision to a level that we believed was becoming more difficult for the business units and for compliance to effectively manage and monitor. We therefore took the decision that it was necessary to contain the relationships based on the resources that were available. And obviously the alternative to that was to grow the size of the resources themselves, which the same sort of cost-benefit analysis that our correspondents would have done said to us was not the way in which we could and should go. The result of this was some account restrictions and account closures in other cases. We did have to roll back some of our relationships to protect our business and our wide base of customers' access to the international financial systems. And here what we did is we had to think about the fact that we really can't put our hundreds of thousands of customers at stake in terms of what they're able to do locally and globally for the sake of a few relationships that might result in us seeing a curtailment of the services that we are able to provide. As we sought to implement our strategy in relation to handling CAMBIO relationships, we included discussions with branch management where we sought, and I would say got, buy-in from that grouping. And I and other members of the compliance team sat on direct calls that were organized with groups of branch managers. And I recall one session in which, after articulating the nature of the threat, one senior branch manager said, "Listen, guys, we have to do this." And that was very effective in sort of rallying the other colleagues when it was clearly brought home to them that some of the day-to-day transactions that their customers need to do with persons overseas might not be possible if we do not continue to have the underlying relationships on which those transactions are dependent. Another important element of our strategy was to ensure the proper assignment of resources. Now, this goes beyond, from our perspective, ensuring that there is a properly resourced compliance department, which we take to be a given for this type of discussion. We believe that we believed that it was also important to ensure that we have the right team participating in effective communication with our correspondent bankers. We needed to ensure that there were well-qualified, knowledgeable persons both on the compliance side and on the business side in terms of the persons who would interact directly with our correspondents. And knowledgeable here doesn't just mean that these are persons who are aware of AML CFT trends. Knowledgeable for us meant that they also had to be aware of local regulatory requirements, to an extent regulatory requirements that the correspondent faces, the correspondent bank's expectations, both regulatory and in terms of their policies and practices, and our organization's AML-CFT program. That way, the persons who are on the calls with the correspondents are speaking from a position of knowledge. They are able also to answer questions off the cuff. They are not caught off guard. They are not giving answers that are clearly inaccurate or subsequently have to be corrected or clarified. We also ensure that we communicate frequently with our correspondents so that they can feel confident about the organization and confident about its compliance program. And we seek, as far as possible, to ensure that the conversations take place at a reasonably high level in the compliance team within our organization. This type of communication means that also that if we give a commitment to have a particular procedure or practice in place by a given date and we're not going to be able to meet it, that we are communicating that before the date arrives and before the correspondent asks. If we deliver ahead of time, we also ensure that this is communicated to our correspondents so that they understand that we are serious about the commitments that we make. What I would say is this: don't just get on the call with the correspondent, even if it's the right persons. We have to prepare for it. I like to envision and encourage the team to envision the hard and soft questions that the correspondents, compliance, and business personnel may ask themselves after the call. They may ask, can I rely on this program? Do I believe that the respondent bank understands its business and risks? Do I believe they're being honest about what they're doing or not doing? Do I believe they are committed to strengthening weak areas? Do I believe they're professional? Do I believe they understand our needs or requirements? Is this relationship likely to get me in trouble later, externally or internally? Will I be imprisoned or will I be fined? These may seem like drastic questions, but we believe that these are the questions that the compliance professional within a correspondent bank or the risk underwriter or the business lead is asking him or herself. And we ensure that our preparation is designed to give comfort around all of those areas. So what have we covered today? We've spoken a bit about de-risking. We've spoken about what we can do to reduce its likely impact. Understanding what our correspondents require and why is important. Building the relationship is important. One thing I would add there is that here at NCB, what we've done is we've been very consistent in terms of the team of persons who communicate with our correspondents. And so when the correspondent calls, they know exactly who to contact. If there is a follow-up, they know who would have the answer. If there is a change on their team, they are transitioning within an existing relationship. So nothing is ever starting from zero. We must also ensure, as I've indicated, that we appreciate the value of transaction monitoring and that we configure ourselves appropriately based on what is commonly expected, but also what's necessary to operate within our jurisdictions. And then we must ensure importantly, that we align with our correspondent's risk appetite. If our risk appetite is low, particularly for transactions that affect the correspondent's account, then we do face a higher risk of being de-risked. Before I hand over back to Beverly, let me just thank you for your participation and also indicate to you that when you do receive the presentation material, I'm going to encourage you to open and look below the slides, as there are some additional notes there that I am hoping will be of use to you.